20, 30, forever year thing rather than a single lawsuit brings down the whole house of cards. So anyway, there's a lot more to say about that, but let's get into DeFi, and Nicki has a mic right now. So Nicki, what is DeFi?
Good question.
Thank you.
So everyone here probably knows, but it technically means decentralized finance, and to me that really means doing traditional financial transactions, but on the blockchain, and removing those third parties that kind of like mask what's really going on under the hood, add a lot of friction, maybe exclude a lot of people from participating.
Can you give me a couple examples of traditional financial interactions, transactions,
Yes.
and business models and stuff?
Yeah, so like even just having a bank account can sometimes be a barrier for some people. And inside that bank account, having a savings account, earning interest. Then what if you want to invest in something, or or lend your money out like a traditional bank would do? We can't really do that in the traditional financial world. DeFi lets you do that. Anyone can participate, anyone can get in, anyone can use their money in, or tokens in whatever way they want to, without the unnecessary third parties like taking a cut. I mean, DeFi protocols take a small cut, but nothing compared to like traditional financial systems.
So let's say I wanted to buy private stock, right? Let's say there's a company that's not public yet. I wanted to go buy their stock. What are some of the barriers to entry to me, a regular person who's not super rich, buying something that is considered legally high risk?
Well, first of all, you would have to be probably an accredited investor.
Oh, accredited investor, what's that?
This
isn't a leading question at all. I don't have a point here.
An accredited investor it's this rule put in place to allow people to get into some of these riskier financial systems. And I know they're about to change the rules, but you have to have, like, for a single person, at least like $200,000 of income a year, or $1 million of liquid assets, not including your primary home. Like, it's just a really high barrier for entry for a normal person to do. So, and then on top of that, how do you even buy a private asset? It's usually like, kind of closed deals, like person to person. There's not really like marketplaces for this. How would you even know who to contact? Mm-hmm. Like, unless you know where to go, you're not getting in.
You have to hire a lawyer who makes contracts, who knows who to talk to, in order for you to deploy your money to get anything more than market rates, right? If you're a really savvy investor, if you're really, really good at Robinhood, and you're comfortable with the risk, you can go make some returns, but you're going to lose a lot of money. So for people who want to, for example, put money into a giant apartment complex, a yield-bearing asset where you have your money is now productive, most of the time, unless you go through a REIT or these other kind of lower interest opportunities, most of the time you have to be accredited. And then a lot of these things, you can't get in unless you're an institution. There are private equity firms out there who raise money from people that their minimum check size is $100 million, and their asset under management is billions and billions. And it's not necessarily that this is a bad system, it's just that it's not working for everybody. So with DeFi, we eliminate all of these pieces of friction, the middlemen that take out the fees, the lawyers that write the contracts. You can put that all into code, you can put it on the blockchain, and now every single person who has the internet can participate. You can go get 40% interest on $10 if you want to with DeFi. So I had a little bit of something to say there. Thank you so much for those explanations. I would love to give everyone an opportunity to kind of give their take on blockchain, DeFi.
Of course.
What is it? What does it mean for people? What does it mean to you? And how's your company playing in this space?
Absolutely. So we had a great explanation of kind of the textbook. What is DeFi, and you nailed it. One way we look at it going forward too is we heard participation over and over again. This allows all of you, including us and anybody that's not here in the future, to participate in DeFi. Now, I've been around. I know you can't tell. I'm not a spring chicken. I know I look much younger than I am. But I know I've been around for a long time, and even the financial institutions with stock investing, traditional fiat investing, and there's nothing like DeFi. Being able to get into something and be a part of a company, a startup company, not only be a part of it, but at any moment, any one of you could create your own product, your own company, much, much easier than going into the traditional methods. So going forward, yes, there will be some regulation that will come down from the government. That's inevitable. You know, governing ourselves, playing nice together, making sure that we can move this entire space together will at least limit the impact. One other thing that you want to look at is manipulation. That's a huge problem in our traditional financial system right now. We know it happens in crypto. Look at Bitcoin. I'm sure all of you know the manipulation that happens with Bitcoin. These are things that we can start taking control of. When we look at DeFi, we can start taking control of that process, limiting the manipulation, and really putting it back in the hands of the people and the people that are involved in this space. So that is a very powerful tool. That's really what I love about DeFi, and I'm excited to keep going forward with it, as all of you are, I'm sure.
Thanks. Chris, since you have the mic, I wonder if you could tell us a little bit about where the interest comes from, right? I go stake my money, I go invest it in an opportunity on the blockchain. So for example, with Affinity and any other protocol out there, what is actually happening that generates some kind of a return? If I give you $100 and you tell me you can give me back 11%, yep, what's happening behind the scenes? And I know that it gets complicated.
Oh yeah, absolutely.
Just give me some examples of what actually generates interest on the blockchain. Yeah,
on the surface, when you get into a token like Affinity and you put your money in and it's invested, a lot of tokens these days have tokenomics. I know SafeMoon was a pioneer of bringing tokenomics to the DeFi space. So when you talk about those types of tokenomics, you'll have either entry tax, exit tax. What that basically means is when you invest whatever amount of fiat currency, you swap it over to BNB, Ethereum, whatever it is, whatever chain you're on. If you get into a token, then a certain amount of that is going to be subject to a tax, right? And that tax will go into a pool, and then eventually it pays out in a number of ways, whether it's through self-reflections, whether it's through another token. So Affinity, for instance, we reflect back BUSD and pegged ADA. So there's a number of tokens that do things like that. Also, you look at price impact. Now, this is where it kind of mirrors, or at least is tightly correlated to the traditional investment. So if you do put your money in, and people like to watch charts, I kind of have a disdain for charts in some respect, and you have other people that come in behind you that will in turn increase the value of whatever the tokens are that you're holding. And likewise, if people decide to sell off, then it will have the opposite effect. Liquidity pools play a big factor in that. So obviously, when you're getting into a lot of these DeFi tokens that are on, say, the Binance Smart Chain, that liquidity pool is going to be in BNB, for instance. You go ahead and you swap into that, and that liquidity pool has a direct effect on the impact and the price of said token. So I hope I at least answered your question. Again, if anybody else has any questions, you can feel free to talk to us later on.
Sure, yeah, and just kind of what Nicki was alluding to and what Chris is explaining, there are an infinite number of ways that you can create a business and deploy it to the blockchain. It's not only finance. DeFi, decentralized finance, is a really big part of it because there's so many systems and there's so much bloat that we need to get out of the way. But for example, there's a company who's doing farmland insurance in Texas on the blockchain. They're DeFi insurance for farmers who pay variable rates based on the weather. Like all the data that comes in, it gets crunched by their protocol, and depending on how risky the next week or month is, these farmers pay more or less. So this company is doing insurance. They're generating revenue by collecting, this subscription fee from these farmers, and part of their business model is that this token is now bolstered by revenue that's generated by real-world products. So there's a lot of stuff happening on the blockchain in finance that's kind of self-reflectionary. It's kind of a closed system, but we're also starting to see more ways where you can deploy your business and your business model to the blockchain and kind of connect the gap there.
Yeah, and lastly, if I could just throw one more point, and I'll pass the mic on. I don't want to hog the mic here. But when you talk about that kind of thing with generating income to push back into the token of the business, speculation is a huge part of this. I mean, speculation is what drives the stock market. Crypto is no different in a lot of respects. The main difference is when you do generate income and you have a product that's generating income for the token specifically, stocks don't work that way. if a business makes money, if Apple's sitting on, you know, billions of dollars in fiat and cash, that doesn't necessarily reflect exactly what you're going to see in your value. It's still speculation. Now that's going to increase their valuation, but it doesn't directly feed your stock price, where in DeFi it does. So if we create products that feed back into the token and feed back into what we're doing, that does directly have an effect on your value. So that is a huge difference between traditional fiat investing and when you're investing in the DeFi space.
I love it. I love it. I love it. So I'd like to change the subject just a little bit, but we're talking about some technical things here, and we can get into the weeds like you wouldn't even believe. So most people in this room, most people watching, you at least have some level of exposure or interest in this topic, so you're going to understand and follow. There are millions of people out there who are savvy investors. There's millions of people on Robinhood, and I mean, you name it with stock trading. There's millions of people that have interest-bearing accounts, but don't know what's going on in blockchain. A lot of people ask us, like, well, isn't this just like Silk Road? Isn't this only for like doing illegal things? There's such a lack of understanding and trust in this system. So I'd love to talk just a little bit about how do we bridge the gap here? How do we talk to people about blockchain? How do we talk to people about the opportunity on DeFi? Because if I go to someone right now and I say, hey, stake into Olympus and get 8,000% return, you're going to say, like, what? that sounds bad. And right this second it kind of is, but different subject. The token price is down a little bit. So anyway, let's talk about that a little bit.
Yeah, the Silk Road thing. One of the most interesting things as the sales team has been out on the road chatting about Genesis Block is they say we can get you 10 to 15% yields, and people go, no, I don't believe it. Too good to be true. And of course, if you're knee deep into DeFi, you're like 10 to 15%. That's nothing. Like, what are you even talking about? But I think that is a very big challenge. Of 10 to 15% can feel too good to be true. And how we're able to resolve that kind of concern is really walking people through step by step how we make money in DeFi and how everybody is kind of making money in DeFi. And one of the ways that's been helpful for me to think about it and to explain it is just like Nicki said, you start with this idea that you have traditional finance over here, and we have an understanding of how that works. And in traditional finance, or say centralized finance, which could include things like Coinbase. Let's use Coinbase as an example here. When you're making a transaction on Coinbase, there are two things that you're paying Coinbase to do, essentially. First thing is to make a documentation of that transaction and actually say what you bought and put it in the blockchain and kind of put your data there. The second thing is essentially giving you liquidity for a moment and making that transaction go through and providing short-term liquidity. And what can happen in DeFi then is you still need somebody to document that. Like, here's what's happening, here's what's going on. And something like Uniswap is a service that will let you document that. But at the same time, you can have this peer-to-peer lending and providing liquidity and helping people kind of make those transactions happening. And then instead of Coinbase or a traditional like Wells Fargo bank kind of taking the fee for providing liquidity, the peer network can. You and I can, and the people participating in DeFi all around the world. And so you have these two different ways of thinking about the world. How do you go in between them? And when I first started getting into this space, I stopped for a minute and I wrote down what I understood and words that I had heard and things I knew about. And it wasn't very much. But I go back to that a lot because I'm like, oh, if I didn't know it then, if Rachel of 8 months ago didn't know it then, I should try to explain it when I talk to people. And one of those concepts was the stable coin. And the stable coin is a way to go from fiat currencies like the US dollar, peg directly one-to-one to a crypto asset like USDC, which is a stable coin created by Coinbase and Circle. And that, to me, was one of the big unlocks of how you go back and forth between these two worlds. And so once we explain that we're just offering liquidity to these markets and we're able to then get outsized returns because we're in there helping people do what they want to do, giving them the support to go make transactions, build things, build this ecosystem we're all so excited about, it makes a lot more sense. But that was still like a 5-minute explanation I just gave you. So to really answer your question, Eric, how do we make it appeal to billions of people? And how do we go out there and share this story? I think it's two things. It's, first of all, well, three things. I'm going to tell you three things. It's make the knowledge optional. And it's so helpful to explain these things to people who want to know. But I think if we can also create really easy ways for people to participate without needing to know what a seed phrase is, without needing to understand what gas fees are. These are things that probably feel really normal to us in this room and absolute jargon and make no sense to people who are not starting to wade into this water. So I think if there's a world where we can say you can participate without understanding in depth what these are, and that's one of the things we're trying to do at Genesis Block. The second thing I think that will help bring this to billions of people around the world is being what I would say, there's non-custodial wallets where people can literally own the keys to get their crypto, to access DeFi. But there's also kind of where a centralized organization like Genesis Block takes that money, takes on the responsibility of managing it and protecting it, but it also lets the consumer just come in and access that. And honestly, the most simple way to say that is if you forget your password with a non-custodial wallet, you're kind of out of luck. And we as consumers are not used to that, right? Like, raise your hand if you had set a forgot password in the last couple months. I probably do it once a week for various things. So that's a very natural consumer behavior, and we want to find a way to enable things like that for your everyday consumer who you're going to tell them to print out a seed phrase, but it may just not happen. And I think the third thing is easy on-ramps and easy off-ramps, because what we do with money on a day-to-day is spend it. We pay rent, we buy groceries, we get an Uber, we Venmo our friend for grabbing something for us. And right now, a lot of what is happening in DeFi just takes a little bit of twists and turns to move money in and out. And so I think we're going to make it much more accessible to consumers when it's one click, on-ramp, off-ramp. You can be in DeFi, and then you're over here literally buying your Starbucks on your way to something like this. So those are the three things that I think are going to help bring this to many, many more people and bring the power of DeFi.
So to recap, you're talking about thing number one, which I totally forgot already, which was
knowledge, abstracting the
optional
knowledge away.
abstracting the knowledge, custodianship, and then actually being able to use your money.
Yeah, on-ramps, off-ramps.
I'd love to give Ethan a chance to talk a little bit about custodianship. So this is a technical topic. It has a lot of meaning and weight. Who owns the money? Who is incentivized by that pile of cash? How do you operate? It's a pretty technical, pretty big topic, but I would love to dive a little bit deeper into custodianship, custodial crypto, custodial banks, non-custodial crypto, money under mattress. Tell us your thoughts about custodianship and what it means in the world of DeFi.
Yeah. Well, my first instinct is definitely to make an elaborate joke about money on your mattress, but I'll spare everybody.
Yeah, that's where I was going too.
I'd like to spend 5 minutes talking about which part of your mattress to put it on. No,
it can't be too lumpy.
No. You got to be able to sleep on it still. But no, huge, absolutely huge custodianship. Okay, so every brand name that you know of is a custodian. Wells Fargo, Coinbase, BlockFi, Chase Bank, everybody is a custodian. The only non-custodial options out there are basically DeFi wallets. And they come with their own like whole can of worms, whole difficult thing to do. The problem with custodianship is it incentivizes the custodian to hold your money. So who's ever jumped into a crypto app, like swiped your debit card, uploaded your driver's license, done KYC, AML, which if you, I'll try not to use any acronyms I can't define. So KYC, know your customer, it's your driver's license. AML, anti-money laundering, this is who I am, I'm not a criminal. So who's ever done that process in a DeFi app? Probably a bunch of us, okay, cool. And then who's like put money in and they wonder how in the world do they get their money out? Me, definitely me. I'm just like, okay, I gave you guys $2,000. I have to like write down this 20 character long account number and like manually sync it with my bank. Like, oh my gosh, this is just the worst. Like I gave you money through, what's that super easy?
Plaid.
Plaid. I gave you money through Plaid, but I can't get my money back out through Plaid? Like, what is going on here? Are you in fact trying to steal my money? So okay, oh that's custodial. Oh, who's ever made a trade on Robinhood? Robinhood, super popular app, yeah. And then how long does it take to get your money back out? You didn't have any money left to take out. Okay, that's unfortunate. I'm sorry. But yeah, 5 days, 4 days, ACH, whatever. It's a huge pain. So, all right. So, and then of course I have to talk about Giddy. I'm wearing the shirt. So, how does Giddy address this stuff? Giddy is non-custodial, but at the same time, but you have to make a seed phrase. You have to write down your private key and put it on a dog tag and swallow it, and then you don't actually. So Giddy is going to change the planet as far as DeFi is concerned. We are a non-custodial wallet. You don't have a seed phrase. It's recoverable. And then moving on to the next step, fiat on-ramp, super easy with us. And then as far as staking into a DeFi contract, it's going to be a one-tap kind of thing. Getting money back out, again, one-tap kind of thing. So it's going to sound crazy and bold, but that's what we're all about here. We have solved basically all 4 or 5 giant pains in the DeFi space with Giddy, and that's because we have a team of 6 technical co-founders who all have a ton of experience. We're the best around in blockchain. I don't know. I don't want to talk about Giddy too much, but
a recoverable seed phrase. Okay. Now that sounds like something I can get behind.
Yeah, let's talk about strictly the tech that everybody's going to notice. Okay, so crypto heads are going to wonder. Okay, wait, I just logged in with Google. Are you custodian or not? But we're non-custodial. And I know I'm not going to divulge our IP and stuff like that. This is stuff that we've worked very hard on. But yeah, this is an innovation that we're first for, and we're going to be known for, and everyone else is going to follow. Everybody is going to follow this path. A non-custodial DeFi wallet with a recoverable private key.
We're calling it decentralized private key management. And without getting too much into the weeds here, your private key gets broken up. It gets put on a blockchain. It gets put on your secured device behind your face. It gets put into a password that you memorize. It gets put into a handful of secure places, and your private key gets recomposed at the time that you need it, and then it gets poof, gone. We don't send it across the wire. We don't store it anywhere. We literally cannot access it. The only person that can is you with your Google account, your password, your phone, your face scan, your Facebook account, whatever. So it's revolutionary. It's a brand new technology that's not out there yet. It's a gigantic burden that we have in the DeFi space, which is to give you access and control to your money. You are the custodian, which means you get all of the upside and allow you to protect yourself in case you lose your private key and in case someone else wants to steal it. If someone else gets any one of these factors of your private key, they can't recompose your private key without all of the other ones. So
I guess we are going to get into the technical details of how it works. But for the layperson, for the layperson, just think of it as the Harry Potter Horcrux security method.
Exactly. Yeah. Giddy equals Horcruxes with a lot less noseless Voldemort. Great. Yeah. Custodianship is a big deal. Who owns the money and who's incentivized by that pile of cash? What do they do with it? How easy is it to move it around? And like we just heard, sometimes you lose the money, and it's the fault of the custodian. So obviously, you can lose your money too if you're self-custodying it, but that's something that we're really looking at solving. Awesome. Thank you so much. So there's so many issues and topics that we have to solve, and really what it comes down to is solving it with technology. We can't expect everybody to learn the ins and outs of MetaMask and print your seed phrase on license plates and put it into a bank vault. We have to bridge the gap with easy-to-use, abstracted technology. Fantastic. So what do we want to talk about now?
Really quick random comment on what Chris, right? Yeah. On what Chris said about the difference between traditional and DeFi finance. And just really fast, just one idea here. I love what you said about the opacity of traditional finance. You can have a company that's 100 years old that had $10 billion in profit last year, have a market cap of $10 million. Yet you can also have in the New York Stock Exchange or any NASDAQ, whatever, a company that has yet to put a product in customers' hands go public at a valuation of $35 billion. And what's awesome about DeFi, and I think of this idea, I think will evolve and catch on as time goes on. But I see cryptocurrency as clarity, not opacity. Not not shadowy super coders, but doxed, talented people who have respectable careers. That's what we've got. And on the DeFi side, yeah, so we like to call it token value accrual. There's a clear path to token value accrual when each part of the transaction, like, gets reflected or gets saved into a treasury and stuff like that. So anyway, I just wanted to re-emphasize that point you made, because it's really like taking the dark whatever cover off of this black box that is finance, and then we're just bringing clarity and bringing truth to it.
Love it, love it. So let's keep talking about this. So there are a lot of different blockchains out there, whether all of us are familiar with all of them or not. I'd love to give Nicki a chance to talk a little bit about what does it mean to have more than one blockchain. Let's grab this. So just talk to us a little bit about, like, what are the implications of having more than one chain? What does it do to speed? What does it do to cost? What does it do to liquidity? Is it safe? Is it not safe? Proof of work, proof of stake. Here's 10 questions that you can just pick one.
Okay, awesome. Yeah.
I just found out I was moderating pretty recently, if you couldn't tell. So.
No, you're doing great. No, yeah, I think it's so cool when new blockchains are coming up. I mean, it's still such a new technology that there's, people are going to think of new things that they can do on the blockchain and new things that the blockchain can do, and different problems to solve and all of that. And there's no way that we got like an all-encompassed blockchain right with, Bitcoin, Ethereum. Like, people are like, the more people that get involved, like the more heads that are involved, the more thoughts that are going to come up, and the more ideas that are going to happen. And what better way to do that than to build a blockchain from the ground up? What
are some of the problems that Bitcoin and Ethereum share?
Sure, like, slow block close times, fees, like go on Uniswap, like I was doing this morning, trying to get test data and enter a liquidity pool, and I'm spending $150 per transaction. I mean, that really, kind of goes against the whole spirit of DeFi, of, lowering the bar for entry. I mean, at that point, unless you're, throwing around tens of thousands of dollars, it's not really worth paying those fees. So. And
you were pretty early on the Ethereum chain.
Sure.
2-3 years ago, what were the gas fees when you started?
Pennies. I could do like easy ETH transactions for pennies. Obviously, smart contracts would get more expensive, but it's just insane right now. I mean, we're hitting like.
So why does it cost so much now? 2, 3 years ago it was a penny. What's going on that like a single swap on Uniswap or whatever is like $300?
Really, it's like the network usage, like, which is awesome. Like, so it's a love-hate relationship. I loved seeing, like, oh my God, like OpenSea is taking up like a third of the transactions, and that's great and awesome. And that means that the blockchain space is getting used and it has like valid use cases, and it's just getting bigger. But obviously that becomes a problem when you can't afford to use Ethereum anymore. So really,
OpenSea is an NFT platform, right?
Yeah.
And they're doing, and you might not know this off the top of your head, but they're doing how many transactions a day?
I know, like yesterday, their transaction fees just for OpenSea were topped $900,000 just in transaction fees on OpenSea. Like, it's huge.
And that money goes to Ethereum miners. Some of it just gets burnt. Some of it just gets deleted. But like, we're paying high fees because of this congestion.
Yep.
What about, let's talk about like it's a little bit changing the subject, but the metaverse, for example.
Sure.
If OpenSea it's kind of like eBay. You go and you find something you like, you put a bid, and it takes a handful of minutes, maybe hours, to actually do that transaction. That's not that frequent, but still we're burning $1 million a day on fees. Mm-hmm. What about when you want to do gaming? What about when like you kill a bad guy and 1,000 other people kill that same bad guy, and you want to get some piece of loot, and 1,000 other people want to do that, and it's happening multiple times a minute? Is it even possible to do that on the Ethereum network right now?
Probably not with the block times. It makes it way too easy to front run each other. If you can look in the mem pool and be like, oh, he's getting this loot box, I want it, I'm gonna pay more gas, and I'm gonna get my transaction mined first. Like, it's just a non-starter. And then also with gaming, with Ethereum, how do you do microtransactions when it's $50 plus to do any transaction? Like, that's just not really sustainable.
So Ethereum is known as a layer 1 network, right?
Yep.
Which means what?
That means that it's like own blockchain, not dependent on anything else. It's an own independent entity.
So layer 2 network is kind of the logical next step. Tell us a little bit about what does layer 2 mean? And so for anybody who doesn't know, Vitalik Buterin, I'm probably not saying his name exactly right, but he was the founder of Ethereum. He and his team, a long time ago, 2013, 2014, were looking at Bitcoin and saying like, okay, look, I can send money to you, you can send money to me, no one can tell us no, but where does that leave us? Where does that get us? It's not a great currency, it's too slow, it's too expensive. So they have this idea of smart contracts, of let's make the blockchain smart. Let's be able to write code and put it on the blockchain rather than the open internet, so we can have a decentralized, powerful, fast computer that does all this work for us, right? So Vitalik Buterin, extremely important figure in the space. He's a forward thinker. He's just one of the most intelligent people on the planet right now. Pretty recently, in the last year and a half, he talked about the importance of layer 2. He said that we're not going to scale DeFi. We're not going to scale blockchain services without layer 2. So just kind of as setting the stage, this problem, this concept of congestion, of usage of the networks, of network fees, is something that people are thinking about at the highest levels. It's obvious, like regular people who want to buy groceries with their money, you can't spend $170 just to get your transaction on the blockchain. You want to go buy some salad or whatever, which of course we all buy salad a lot. I do constantly. I'm constantly thinking about salad fees. If I'm going to buy Ethereum salad, I can't pay $170. So this is a very big thing we're thinking about. Giddy thinks about this a lot. We're not deploying to layer 1 to begin with because it's just too expensive. It's just too slow. So layer 2, what's going on there?
So a layer 2 blockchain, it is a separate blockchain. Like we'll use Ethereum as an example. We'll say like Polygon. It's running an EVM, which is the Ethereum virtual machine. And that's what runs the smart contracts.
That's like the computer. That's like the brain in the
computer.
sky. That's the Skynet that will rule us all, except for it's not intelligent. It's not AI.
No, let's not bring Skynet into this.
I don't know why I said Skynet.
Oh my God. But it really, so it runs independently, and you can make changes to it. They change like the block close times, and they can do stuff like that. But really, they have what's called like a bridge. So that's really what's connecting the two blockchains together. So we'll use Polygon and Ethereum as an example. I can send ETH to the Polygon bridge, and within a few block closes, it shows up on the Polygon chain in my address. They use this, the same address derivations. And so if you have an address on Ethereum, you have that address on Polygon. And your private key will unlock both. And all of a sudden, your ETH shows up on this other chain. From there, I can.
And how long does that take? You mentioned block close time, right?
Yeah.
That is block close time. Like kind of what's going on with that?
Well, how technical do we want to get?
Each block that gets added to the blockchain, right? It's a set of transactions that are set in stone that are immutable, and it takes 4, 8, 12 seconds to do that, right? So each time something gets put on the blockchain, it just takes a handful of seconds to do. So
to get mined, and then you want to wait 6 confirmations, to make sure it's confirmed.
So moving money from layer 1 to layer 2, how long does that take?
Less than a minute.
Less than a minute. It's pretty fast.
It's really fast. It's definitely doable. Especially you're not going back and forth all the time because you're not wanting to do a bunch of ETH transactions all the time. So you can wait a minute to do a transfer. Try to do an ACH and you're waiting like 3 to 5 days. I can wait a minute. So you can get your funds from ETH over to Polygon. From there, they have a lot of the same smart people deploy smart contracts over there as well. Like I know Uniswap just deployed onto Polygon just within the last month. So I could go over there and do these Uniswap transactions at just a fraction of the cost. We're back down to pennies. They have lower usage. They have less network congestion. You can your transactions mine almost immediately. It's within a second or so. And I'm paying pennies for my transaction fees.
So those transactions that you pay pennies for, they're super fast. They're just miles away from $200 per transaction. Are we getting the benefit of this massive Ethereum network in layer 2? Is there any connection there, or are we just kind of often this totally separate system that could potentially have all these flaws and stuff? And I know this is a little bit of a complicated answer, but I'm looking for a yes.
Yes, yeah. I know. I'm like, it depends, and Yeah, but you do, with these layer 2s, you take advantage of the large Ethereum network, and you don't have to create your completely own your own blockchain with your own miners that are not connected to anything else. That can get really hard to go from the ground up. I know we have like Tron Black in the audience, and he's the founder of like Ravencoin. That was like at the beginning, we're trying to get all these miners going, because how do you have a decentralized system when one entity is doing all the mining? With layer 2s, you don't have that problem.
Lovely, love it. This is something that, again, we're getting kind of in the weeds. It gets technical, but we're going to have a lot of people wondering, a lot of people meaning the next million people that get into DeFi, they need to know about security. They need to know about fees. They need to know about time to get your transaction onto the blockchain. The way that we scale this up is by adopting layer 2s. There are other layer 1s out there that are pretty good also, but this whole ecosystem it's developing so quickly that you're going to be hearing words about, you're going to be hearing names of other blockchains that you don't recognize, and it's important to know what you're working on here. But we've already got dozens. We've got quite a few blockchains that are big, that are decentralized, that are safe. They're way cheaper, they're way faster. But this is how you and your friends and the next million people are going to get into DeFi on the blockchain, is by using this distributed network of other blockchains. So Affinity, if I remember right, is on the Binance Smart Chain, right?
Yes, we are. And again, talking about gas fees, I'm going to touch on this for a second, then I want to back up a little bit more about Affinity for a second. But yeah, gas fees. I went to go launch a smart contract on Ethereum network the other day, $1,000, USD value. They wanted an Ethereum to launch that smart contract when I launched the exact same contract on BSC for about $11, 5 minutes earlier. So yes, gas, because of the network congestion, is becoming a problem. And the more blockchains we have developed, we can solve some of those issues. One of the big issues right now I see as well is the amount of data that can be stored on it, and also speed. So one thing that people are looking to do, which a few companies have, but we really need to expand on, is bringing like social media to the blockchain. It's just not fast enough. So when you post on social media, everything's instant gratification. You want that like, if I post, you want everybody to see it at the same time. Blockchains are just not fast enough to handle that on the scale that we're talking of social media. When you talk about, Twitter having millions of people and Facebook having billions, we couldn't make a post on Facebook scalability on a blockchain and have 1 billion people see it all at the same time. It's just not going to happen at this point. But just to back up a little bit, when we're talking about some of the things going from blockchain to blockchain and moving things around, when you were speaking about some of the stuff Giddy was doing, and we talked about on-ramping and off-ramping, if you heard in the beginning, I talked a lot about, I mentioned that we're looking at keeping people inside the space and helping that movement inside, whether it's from blockchain to blockchain or inside the BSC or inside the Ethereum chain, much easier. Show of hands, how many people have sent, and you don't have to admit to this, how many people have sent any kind of token or any crypto to the wrong address and it was gone forever? You just copied that address in there and it's gone. Affinity is solving that problem. It's already the platform that we have developed is called Adapt, Affinity Digital Asset Payment Technology, and its infancy is simply a way to send crypto, right now the BSC and Ethereum, peer-to-peer using a username. So essentially it links your wallet address to a unique identifier, a username that you pick. You assign a profile picture, create a bio, whatever it may be, and you can use any wallet you want, MetaMask, SafeMoon Wallet, Trust Wallet, SafePal, and we'll see what happens with the Giddy wallet. And this is why also, to kind of sidetrack a little bit, this is why I'm excited to be here, because there's a lot of new technologies being developed that overlap, and you never know what can happen in the future. So with Adapt, we're creating APIs that can be linked into things like wallets, websites. When we're talking about the metaverse, if people want to create logins with the metaverse using the Adapt APIs, your wallet will automatically be linked to inside the metaverse when you create your account and go in through their portal. So there's a lot of things that can be done with this technology, and it's really a simple concept. You look at PayPal, Cash App, all these other different things that are already out there in the fiat world, that make it simple. What we're really trying to do is bring those types of ideas, not just with Cash App, PayPal, and Venmo, but other ideas that we're used to in the fiat world to DeFi, to crypto, because when you're talking about getting people mass adopted to crypto, they need to have and understanding whether it's somebody that's young coming in, somebody that's older, that's used to the old way. If they're not identifying with some of the traditional ways we're used to doing things, they're going to be turned off very quickly, or bad things happen, sending crypto to the wrong people. I've done it. That's actually where this idea came from, was one of the times I did it. Innovation usually comes from problems that you've experienced yourself. So going forward, getting more on the blockchain thing is, as of recently, we developed the cross network to Ethereum, so now you can send tokens to each other through Ethereum. We want to expand on that. I know when the SafeMoon blockchain comes out, there's things we have to look on that. We can easily deploy and expand into that. Other blockchains that come out, we can just deploy, and we can seamlessly integrate your already existing username into that platform. So whatever blockchain you hop to, it's automatically going to be recognizable by your username. Another thing that we are bringing into the space that has not come out yet, but it is something that we are working on, looking at Q2, is a pure peer-to-peer DeFi exchange. Again, going into the multiple blockchain, we do want to expand on that in the future. So you can, as it stands, the way it's being developed is you can actually take some of the tokens that you have, whether it's Affinity, BNB, SafeMoon, whatever it is, and put those up to exchange amongst each other, rather than having to go through the hassle of selling or swapping anywhere else. You can simply put it up and say, you know what, I really want to exchange this token for X token. And somebody else can come along and say, hey, I have X token and I want that token. Why can't that happen? Why can't I just come along and actually make that exchange? Right now we can't really do that, because if I pick somebody in the audience and say, hey, I want to change tokens with you, I have to hope that when I send it to you, you're actually going to do the right thing and send it back. And we all know that 99% of the time that's not going to happen. So Affinity is solving that problem through Adapt, and that's where the exchange comes in. And again, the more blockchains that develop, we can cross-bridge into all of these blockchains and eventually look at ways to exchange tokens from BSC directly to tokens that are smart contract tokens on the Ethereum network or any other networks in the background, and you won't even see it because it'll be done through bridges and smart contracts. So this is really the way the future's going, and again, this is why it's very exciting to be here and see all the different things people are building, because there's always ways that we can incorporate and work with each other in this space. So
I love that call out, and specifically solving a problem like sending money to the wrong place, not getting it back. Solving that with technology, where code that's well written, well tested, it makes sure that doesn't happen. This is what we're all accustomed to. This is what we're all hoping for, is just easy. I click a button, it works. I know that it's secure. We have to get there by writing code, by pushing forward on the technology. Last year, there was it 20 or 30 billion? There was a report that came out about venture capital money that went into the Web3 DeFi space. A lot of it's NFTs, a lot of it's DeFi, but there was 20 or 30 billion that went into the space, or maybe it was 60. It was an astronomical number. Probably should know before I reference it. It was big. And there was something like 48 individual companies that were each valued at over $1 billion. There was another 117 or so that were valued at around 500 million. The amount of money and effort and momentum being put into this space to evolve the technology is staggering. What it means is that these people who are looking forward, to the next 10 years of gains, I mean, you think about a venture capitalist, and what are they doing? They're looking for inflection points in our society, in our technology, that are going to be adopted by everybody, that changes the way everything works. Like, obviously, if you were early on like Facebook, that would be massive. If you were early on, SSL encryption, that would be a massive investment. All of these people who are looking at what's next are flooding to DeFi and to Web3 at a pace that is just mind-blowing and blows out of the water the last year and a half. So I'd like to talk a little bit about, let's come up to kind of a higher level. We've been in the weeds for a little bit, which is my favorite place. Like, I love talking about technical stuff, but let's talk about at a high level, over the next decade, what does this space look like? What are the innovations that are going to mean something to us? How can we get there? Let's talk about kind of a high level the next decade or so. And then after that, I'd like to give each of us a chance to talk about what we're excited about at our specific companies, and then we'll do questions. I think we have until 11:45 in this session. So the next 10 years, what does this look like? And yeah, let's go to Rachel. Let's go to Rachel, and then we'll kind of come back this way.
Do you want me to just pass it on?
Unless you have something to say right this second, then go for it.
And if you don't mind.
Let's do it. Let's do it.
I got it. So I mean, one of the things that we talk about going forward is I just kind of mentioned it, us being here, right? It is very, very important for us in DeFi, in crypto, to band together in a way that we can create and innovate and bring things forward in the right way, right? There is a lot of scams out there, yes. There is a lot of eyeballs on DeFi. There's a lot of eyeballs on crypto looking to take that away. The best way to combat that is to keep innovating and creating in the right way with legitimate companies, with legitimate projects, with people doing the right thing. One thing that we see a lot of, and it was touched on in the first panel with Scott, is there's friction. There's a lot of friction happening, especially when you look at social media. We need to knock that off. We need to actually, unite DeFi is one thing that we really stand for with Affinity. You'll see that all over the place with us. And that's working together. It's not competing. Obviously, there's always some level of competition. But if you come from the traditional, business world, you'll see that you can't do it alone. Businesses that are in traditional businesses work together be it through contracts, partnerships, whatever it is. DeFi and crypto is no different. But for some reason, we take this stance. I think because it's new. There's a lot of emotion involved in crypto right now. So we take this kind of separating stance, and we. And that's okay to a point, right? You want to be proud of what you have. You want to be proud of what you're invested in. But really, it comes down to diversifying. It comes down to looking at other things, building each other up, not just the biggest projects out there, but really digging around and seeing what is out, who's developing things that maybe nobody knows about. Even Affinity, we're very small. I don't know how many of you heard of us before we came here, but we have like a 6.6 million market cap, and we've been out since August. And we're building on that, But there's a lot of companies out there doing some great things. Giddy, I didn't, you guys haven't launched yet and you're still doing a lot of things. I didn't know who Giddy was before signing up for Cryptopia, and I'm glad I did. There's a lot of good things coming out here, and I'm excited about that. I see the next 10 years as a big turning point as long as we can take that mindset and move it forward. Regulation's going to come, but if we don't regulate ourselves, that regulation is going to be even more difficult to overcome. So please take that mindset with you as you're working through DeFi and looking through projects because it's something that we absolutely need.
Love it. Love it.
Awesome. The thing I am most excited about for crypto and DeFi in the next bit here is the ability to earn yield on all your assets. And the ability to earn yield, this has been mentioned by a number of people here, but ability to earn yield on your digital assets, and right now that generally means your cryptocurrencies or your cryptocurrency versions of your fiat assets, things like NFTs. But I am excited about that because it means that your assets don't have to go up and to the right. You don't have to buy some cryptocurrency and hope that the value is going to rise and that you're going to go along for the ride. The value can stay like this, and you can still generate money while you sleep, right? That's part of the dream here. And so I think we're seeing more and more, and new projects are kind of working that into their tokenomics. Existing projects are going back and trying to weave that idea in of paying current stakeholders the cash flow that's coming in. I think that's going to be really changing of how we think about this whole ecosystem. And then where I get really excited is how do you apply that idea to real world assets? How do you take a house or a cow or a goat, so let's use all the barnyard animals here. How do you take those and make a digital asset version of them and let somebody earn yield on their goat while their goat is also providing something their family needs day to day? So I think that's one place that we're going to see DeFi made accessible to many, many people. Should I do about what I'm excited about Genesis Block 2? Are we doing these 1, 2, or coming back for that?
The free form. This is
okay.
Poetry up here.
Yeah, I'll just take another 30 seconds then. I'm excited that we are going to be the first kind of experience of what's happening in crypto and DeFi for so many people. And there's this phrase used sometimes in VC of non-consumers. Who is coming to your company or your service or the experience you have who wasn't already using it in some other way? And that's kind of one of the holy grails. If you're just stealing from your competitors or getting people already in the space, it's great, but it'd be even better if the market is getting bigger and bigger and bigger and you're expanding that total addressable market. And I think that's what I'm really excited for Genesis Block to do, is bring in more and more consumers who were non-consumers in the DeFi space, in the crypto space, until they walk in our front door and join this community that we're all here creating. So
Awesome. Thank you.
Is this the last comment and then we'll take questions after?
Sure. Tell us what you're excited about in general in the DeFi space. Tell us what Giddy's up to.
Yeah.
And then we'll come back. We'll come back and do these two also.
Yeah, Rachel nailed it. It's right now. It's about yield. You know, do you want to earn 1/10 or 1/100th of 1%, or do you want to earn like 15 or like 1,000%? So
I'll take 1,000.
Yeah, and obviously, you know, just society in general has determined that interest rates are inherent representation of risk, and that's true on the blockchain as well. If you want to earn 3,900%, your asset might go from $1,300 to $100 in just a couple of short months, like Ohm. But if you want to earn, you know, like 8, 12, 15% on a stable coin, that's actually possible right now, which sounds crazy, but it is. I'm really, really excited for Giddy to get out there and show people what we've been building. It's just really, really awesome. So again, we're non-custodial, not my keys, not my crypto. So with Giddy, we're non-custodial, which means you do own your keys, and you own it in a really unique way that's very easy to manage, very easy to get on, very easy to recover. We are going to be, so like Robinhood was tens of millions of people's first stock purchase. Giddy is going to be that same thing for DeFi. We're going to be a lot of people's, many tens of millions of people's first DeFi stake, purchase, earn, all that kind of thing. So I'm really, really excited about that. We're also probably going to be a lot of people's first NFT as well. We're going to be supporting that as well. So Giddy.co, Giddy.co, watch us close, and we're really excited to have everybody on our platform.
Oh yeah, what are our socials? Let's say our socials on the way back.
Giddy DeFi.
At Giddy DeFi.
At Giddy DeFi.
Pretty much every platform.
On Instagram and Twitter, and our Discord channel is also.
Yep. If you go to Giddy Co, there's a link to our Discord as well. So welcome you to jump in there.
Yeah, link to all of our socials on Giddy.co. Giddy. And anyway, yeah, thanks everybody.
Go Giddy. I feel like I should say the same for Genesis Block. You can kind of find us everywhere you find everybody, but all linked on the website too.
All right.
Yeah. What does the future hold? What are you excited about at TaxBit?
Yeah. So when you were mentioning all these like big institutions that were getting into DeFi, that's something that we've seen that's been really exciting at TaxBit, is that there's a huge hole in the market for like tax and accounting software for largest institutions getting into crypto and DeFi, both on like maybe it's like a hedge fund doing investments, or maybe it's PayPal letting people buy crypto on their platform. How do they actually track this? How do they track their yields? Where is their crypto going? I've seen some frightening things with like screenshots of Etherscan, and they're sending these like to their investors as showing where their crypto is. That's been something really exciting that we've been able to solve and get in, and the amount of like companies coming to us like begging to get in on like early before we go completely live is just astounding, and also just so motivating. People are getting into this, and it's just getting bigger. So obviously, like on the consumer side, that's also a need on like taxes and accounting. That's a huge pain point for anyone who's like trying to track things and trying to report anything that you maybe had KYC AML done, and so you know that you need to turn that in. How do you do that? That's just been a huge pain point for me since 2015. Things are a lot easier now, and then it just gets worse on the institutional scale, and now we're able to solve those problems. So that's been something that's been really exciting for us, and that we're really looking forward to. And something personally I'm excited for is just really like lowering that barrier for adoption. Getting more people in that aren't super technical. I mean, can you imagine, like my parents were like, so what are you doing these days? Well, I'm like, well, I started investing in these different DAOs. So, and they're like, what does that mean? Well, you're gonna get a MetaMask account. You're gonna go to this website called traderjoe.xyz. Like, it's like insanity. Like, no one's gonna like take that seriously. So really like lowering that barrier to entry. Let's just like increase this mass adoption, and that's really where I see the future going.
Love it. Thank you so much. And thank you everybody here for sticking with us. We went through some very deep, very heavy stuff. I don't know about you. I feel like I just went through like a hot yoga session or something like that. Like, I really hope you feel like you were able to glean something. If you feel like you're stressed, like you just did a mental workout, that's very, very good. Like, this space is wild. It changes so quickly. To get your footing at all, you really have to spend a lot of time. You have to dig in very, very deep. So thank you so much for sticking with us through this. This is where I feel we make the biggest difference. We as a crypto community coming together, helping each other learn and helping each other bridge the gaps. Whatever questions we have, no matter where you are at, I guarantee you, I promise you, there's no such thing as a dumb or a bad question in this space. Every single thing that we talked about, every single term is an ocean of knowledge and of innovation and decades of just genius people developing these things to bring us to where we're at. So thank you for sticking with us. I just have to say that I feel like this was a workout. I've been paying very close attention, and I feel like it was a stretch. So I can't imagine everyone else feels too. But let me just say that in the near future, what we're going to experience is a lot of things. We're going to have a mass adoption of DeFi from not only institutionals, which is going to help raise the tide for everybody, but of a redistribution of where wealth is, how it gets generated, how it grows, and how you have access to these opportunities. You're going to be able to participate in the growth of a brand just by owning it. If you own Nike shoes and you're repping them to your friends and you sell a pair, you should probably have some upside to that. In the very near future, if you own a Nike NFT, for example, and they have a way to reflect a token back based on their revenue, you're going to be able to participate in the growth of that company. That's something that we're focusing very heavily on at Giddy. The token that we're developing, which is going to come out this year, and the DAO that we're developing with Giddy is focused on allowing you to participate with us in our growth, in our innovation. As much success as we have is going to be because people adopt us, because they trust us, because they trust our technology. So you have to be able to participate in that growth. That's the way things are going. That's the point of Web3, is allowing you, everybody here, to participate in the growth that you are helping to create, to generate. I want every single person here, if you invest into Giddy in any way, if you buy $5 of our tokens or download the app or whatever, I want you to win with me. And there's a lot of reasons for that. Like, I won't get into the philosophy of that, but like the way that we get better as a world, as a community, is we all win together. So what we're doing in the very short term at Giddy is our app right now is being reviewed at Google and Apple. The Android version is actually approved. The Apple one is coming. But my entire career is an iOS developer, so I've dealt with Apple approval for like 15 years. Well, 2008, when did that start? Oh, whatever, it's been a while. And anyway, they just love to give you little nitpicky things. So anyway, so the very first version of our app is going to be still kind of a way to solidify your line in early access waitlist. You can share it with other people, move your place up in line. We're also developing a NFT collection for all of our early adopters. If you download the app, we're going to give you an NFT. And the NFT is going to be Giddy branded. It's going to be fun and Western and all that kind of stuff. But we're also including perks with those NFTs. For example, you have a chance of getting a perk on your NFT that gets you another 5% in your yield. It gets you access to a future NFT whitelist. It gives you access to a future coin sale. It gives you funny themes in the app, all this kind of stuff. We're investing heavily into this idea of this metaverse where everything is interconnected, where your participation, where you're showing your support, needs to kick you back residuals. So the early versions of the app will be the waitlist, then we're coming out with these NFTs, and then we kind of have to meter the on-ramp as we allow people to use our app for investing. So over the next handful of months, we'll be bringing more and more people off of the waitlist to invest directly into DeFi to get things like 10% stablecoin yield, 30% volatile asset yield, all these kinds of things. So we're coming out with a roadmap. We're going to be sharing all this content with you just as soon as we have it. I swear we're sprinting as hard as we can to get it out, because I'm so excited for people to see what we're up to. But I just wanted to set the expectation of the app's coming soon. There will be a wait list. You get an NFT, and being an early adopter means that you get those perks because you trust us with your time, like downloading an app and signing in. We're going to make sure that you're rewarded for that. So I would love for everybody to go to Giddy Co, get on the email list. We'll tell you when that's ready, and then early adopters will get all these perks. So that's what I'm excited for in the very short term, in the very near future. And then on top of that, every single thing that we do is fundamentally built on technology. It's built on the blockchain, and it's built on smart contracts that we're developing to make DAOs better, to make tokens better, to make security better, to make approvals better. Dan mentioned earlier that there's this infinite approval, for lack of a better word, bug in all of DeFi. When you go and stake, you give them permission to spend infinity money from your wallet. And the only reason why more people don't get hacked is because a lot of people don't know this is happening. And then it's also difficult to go and like hack someone's smart contract and make a problem out of that. But what we're doing is the exact right amount of approval for your token so that you don't have that vulnerability. There is no infinite money approval with Giddy. On top of that, we're obfuscating your transactions so you can't get front run. And this is kind of a technical topic, but what it means is that people who are looking at your transactions who want to like pay a little bit more money than you and kind of steal your thunder, they're not going to be able to do that because we're encoding your transactions in something called a meta transaction that makes it safer. So there's a lot of very technical things, but what it boils down to is that inflation last year was 6.8%. The average savings account on the internet was like 0.04%. I want you to beat inflation. I want you to save for retirement. I want you to have the same opportunities that accredited investors do. I want you to have productive assets. Turn your Ethereum that's not doing anything into something that's giving you 30%. I want everybody here to be part of the next wave and evolution of our economy, of crypto, of DeFi, and the Giddy app and the way that we're building our technology is how you're going to do that. And I think that we're going to take the world by storm. I think that things that we've innovated that don't exist yet are really going to blow a lot of minds. So the more that we can come together and learn about these technologies and show a collective amount of trust, the faster that we push this needle forward, the faster that we all benefit from this. So that's what I'm excited about.
You should have been a preacher. A preacher. Oh, he was a preacher for 2 years. We're going to Q&A now. I'm DeFi Jedi here. This is one of my costumes. I have 10 today. Q&A, we only have a few minutes. I'm going to pass the mic. No, love it. It's a workout. It was hot yoga, man. You're good. You're good. All right. We got one over there. Let's do it. Here you go. Pass the mic.
I'm Erin Moore. I'm a Salt Lake City local and real estate investor. Thank you so much for your time. My question is this. I know that you guys all kind of touched on your desire and focus to get the barrier of entry to be more broad. However, I see a clear socioeconomic educational barrier that prevents people from really getting in. I mean, time over time today, we've gone too high, too technical, right? We've said, okay, this is too technical. Let's take it down a notch. How are we planning on overcoming that educational barrier?
Less technical person answer that question. How about that?
Can I just be really quick on this?
You got 1 minute. I'm cutting you off.
All right. Well, one of the problems with the barrier is making things, like I said, a little bit simpler, and getting the power of certain technologies in people's hands that are not so technical. And that's one of the things that we're trying to do with Adapt, and I'm sure Giddy's, with their product, is really making things more simple and easier to understand based on products that we're used to using every day. When you look at things that are on the blockchain, or when you look at trying to use PancakeSwap or walk somebody through that whole process, it's a mess. Most people don't understand it. It takes 2 to 3 days. But when you can create more tools and make it easier and say, hey, look, it's a 2-step process. I can go from fiat to whatever token I want in a 2-step process. That helps out a lot. Obviously, there's a whole economic thing also that plays into that with making sure that people have access to funding. But it's from a technical standpoint, that's really the easiest thing you can do is continually create things from a lower level instead of getting so far in the weeds where you forget what it's like to be at entry level.
Everybody uses Venmo. We got to make it as simple as Venmo. We don't even need to use the word fiat. Like, let's use the word money. And let's
USD.
use the word,
So one of the first things that Giddy did, and I love the question, one of the first things that Giddy did months and months ago, we purchased whatisdefi.com. Because that's the first question we have to answer. It's not, do I want DeFi? It's, what the hell is DeFi? So just so you know, we're dedicating an entire section of our website to education, learning. What is it? How do we, constant blog posts and educational stuff, a glossary of terms defining everything. So we are definitely, we have that in the forefront of our mind.
You have That's a perfect question. It's a problem. It's the biggest problem. I have other stats I won't even share, but it's what everyone here I think is coming together on is simplifying it. All right, we'll go back to you. All right, you ready?
So I think one of the cool things about DeFi, right, decentralized finance, you can disrupt these huge like financial institutions in America, right? And loans, like it has the ability to do like loans for people, which is really cool, right? Right now, as I understand, like all loans are over collateralized, right? Often like 150%. People have a hard enough time saving up 25% for a house. What do you see? You know, how do we create more utility for this service? You know, or is there anything on the horizon?
Not a loan officer over here, but no, I know, weird. No, that's something that I see that's really cool. It's like there are a lot of platforms that are coming out with a way to get a loan on your crypto. Like that's kind of something that's been really popular right now is don't sell your crypto. If you need the funds, just take a loan out on it. And I see that as something that is just incredibly helpful and useful for just so many people. I mean, the rates still aren't great. Like I think on Celsius, like to get like the really low interest rate, you have to have like, you can take like 25% out based on how much crypto you put in. But I feel like it's still better than taking out a second mortgage on your home. And if something goes bad, you lose your entire house. Like it kind of really puts the collateral into something that isn't so essential to people's daily life and isn't going to put people in a really bad position if the market goes the wrong way. I don't have too much.
I can speak to this as a massive user of loans on there's BlockFi. Now Coinbase does it too. You can just in 5 seconds take your $10,000 and get a $4,000 loan at 6% on Coinbase right now and borrow. It's called the Borrow product. There are so many loaning and lending and borrowing protocols out there. So it's happening. We'll talk about that later. But let's go to a few more questions. And then, what time do we got to be done? 11:45? 2 minutes ago. Okay, let's just do one more then. It's back here. Right there. Okay, we'll do that.
Yep. So I'm like super new to the space. But I just saw some stats that kind of brought some questions to my mind of like the current system, you know, we have most of the wealth is owned by a small percentage of humans. So someone said this similar stat of like crypto and NFTs and that whole space, the majority of it is still owned by a small amount of humans. So like, are we just painting a new picture? Or like, what ways is this really going to disrupt the distribution of wealth?
We have a long way to go before that process is complete, but what we're doing in this space right this second is eliminating the problems that caused this unequal distribution in the first place. So like we talked about, this accredited investor thing, right? There's not really opportunities for regular people to really grow their money in a highly meaningful way. So we're beginning that process now of allowing more and more people to have access to wealth. For example, Kirk Wiemet and Scott were on a podcast recently where they were talking about pay-to-earn gaming, right? Metaverse gaming. There's a group of people in, I forget what country it was. Philippines, there you go, who they're playing a game on the metaverse and they're creating these assets that they can go sell for like $3,000, $4,000 each. And these people in the Philippines, it's an extremely meaningful amount of money that they can go put some work in and they can get asymmetrical returns for that. So we're already seeing money flow from whales to non-whales. That being said, it's an extremely risky space still. You really have to know what you're doing right this second in order to get some of those asymmetrical gains. But I would say that we are eliminating the problems and the roadblocks and the middlemen that are causing that problem in the first place. It's going to take a while, but we are already seeing kind of a redistribution of access to wealth, which is what I'm really focused on doing, is democratizing access to these wealth-generating vehicles. So it's not perfect, but I believe that we're getting there, and it's something that I believe very strongly in, that we all have to have the same opportunities to wealth. So human nature being what it is going to take a while, but it's already happening.
Great answer. I think that's it for this panel, unless anyone here has one last word. All right, give him a hand.
Thank you.